Good afternoon, welcome to GrainTV. My name's Cody Bills, this is Kevin McNew. Today is the 18th, a Thursday. We had the export sales out, and let's turn over to the iPad and see where we closed off the day. Corn trading up 3 cents, soybeans up 8 cents, and wheat in Chicago up 4.5 cents here. One thing to note is that Chicago wheat contract was trading up as high as 27 cents on the day, backing off near the close and closing out near the lows. So I'm a little bit concerned about that sort of price action. Now, we did get some very strong reportable sales, basically daily sales, over 100,000 metric tons that were released here this morning. We saw 111,000 metric tons of spring wheat sold to Mexico. That's very positive. The most of it was actually old crop sales, so that was positive. We had soybeans, 1.5 million metric tons sold to China for old crop. That was mostly a result of that signing on Tuesday with the 6 major soybean buyers in Chicago. And then, of course, we also had 126,000 metric tons of corn sold to unknown destinations. All these are very positive. And then, of course, we also had the weekly export sales report. Kevin, what did we see there, and did that help us move higher?
I think, it was certainly not negative. We can look at the data and say that's the case. Wheat did exceed expectations, but again, wheat is still not showing us any sort of serious legs here. And I'm particularly concerned about our soft red winter wheat exports because those are exceptionally behind pace. Last year at this time we had over 6 million metric tons of soft red winter wheat export commitments. This year we're only around 3 million metric tons. So I'm a little alarmed like you are about the strength in the Chicago wheat market when we're not really moving any wheat into the export market. In terms of beans, we did have a good week. We came in on par with analyst expectations. We are now standing 41 million metric tons of commitments so far, and that is well ahead of the green line, which is sort of the pace line of 34 million metric tons to reach USDA's expectation. Now, obviously, the real question is going to be, is China going to keep buying as we move through the season? You mentioned the 1.5 million metric ton deal that was done this morning or announced this morning. That's going to add to it as well. So, it's still not clear exactly where the top is, but we seem to be well on pace to reach USDA's expectation.
Absolutely. And when you look at corn here, we're a little bit behind pace, but really not that bad. So we're coming in there kind of on pace with what the USDA was expecting. You got 24.4 million metric tons of commitments here compared to the pace that we would expect to see around this time, 24.9. So we're really hanging in there for corn. One thing I wanted to talk about is this price in wheat. Kevin, you mentioned it is kind of alarming here. The pace of export sales is really not very strong here for wheat.
Right, and we're facing a very stiff competition in the global market. Not only Russia with their cheap ruble, but also, and of course that's up in the air now whether they're going to continue. But you have French wheat that won the the Egypt tender last week. So there's no shortage of wheat in the world market, and we are by far sort of priced out of it at this point.
Absolutely. And when you look at the price action here in the last week or so, it has just been very vertical. And I'm concerned that we're not going to be able to maintain that pace and maintain that trajectory. The bottom line, if you're a producer out there, I think your job is to protect these prices that we've been able to achieve here in the last couple of weeks. And with that being said, I went out there and was looking around at different puts and trying to get an idea of what producers could shop for to protect the downside. Bottom line here, you look at the $6 wheat put here for the July contract, and the last trade was around 27.5 cents. Well, we moved up 27 cents on that March contract. We were trading almost 27 cents higher here today. We closed off the day only 4 cents higher. I mean, if we were able to make or purchase a put here with some of that, with some of those gains early on in the day, we'd have that downside protection. I mean, just yesterday we were up about 24 cents. So I would consider that gain there a gift. You could take that 24 cents that was given to us yesterday, roll that into a put, and you have at least a price floor at $6.
Exactly. And the nice thing about buying a put is that it is not a margin position. You're not subject to margin calls. You're not subject to sending more money to your broker. It's a nice insurance policy that protects you if the market collapses. And you know, you and I are both sort of in agreement on this point. We are very nervous about prices sustaining this level as we move into the next part of the marketing year.
Absolutely, but in the short term, I mean, who knows how high this could go? I mean, we've seen just a whole lot of emotion in this trading. We've seen, I would suspect that we would probably have seen some momentum trading funds getting in on this, and when you see that, you see the price move continue
Quickly,
to move higher.
yeah.
So yes, we could still have upside, and that's the best thing about a put is
Right.
that this protects you if the market moves lower. It's an insurance policy, but
Right.
you're still in the game if the market continues to move higher. If you want to learn more about this or figure out how you can shop around for the right put, for the right price, for your particular marketing situation, give us a call. The number's 877-472-4607. We'll set you up with a demo and give you a walkthrough. Make sure you feel comfortable with the trading platform. Thanks a lot for tuning in. We'll see you here Friday for the weekly wrap-up.